For the euro and US dollar, I'm highly interested to basically buy the bottom of this range. So I'm looking for buy setups right here. Depending on the next candle, if it closes bullish, I will maybe enter like a buy setup with a 10 pip stop loss, aiming for a 3 to 1. Just a quick range bound trade. So this pair is definitely on the watch list. EJ is pretty flat and range bound on this 1 hour chart. Yes, there was some massive movement, and the current volatility is very, very high. But for me, the price action is not setting up. I'm not seeing any high probability patterns. Aussie US dollar looking a bit flat and range bound, so I'm looking for potential range bound entries. AJ is looking the same as EJ, so just a bit flat here and not showing me much. The pound is definitely very flat, so I'm being more patient since I'm not trading the range on the pound. And NJ is looking the same as EJ and AJ. So yes, very interesting market. We had some massive movement on the JPY pairs, massive downtrend. I did take a sell setup right here, which banked like 7 or 8%. Other than that, I did not exploit this downtrend much, and I would like to see this price correct a little bit. So maybe on the daily, we can get a bigger correction to the upside, and then on the 1 hour, I can exploit that short-term uptrend. So that is the game plan, but for now, I'm not seeing much, unfortunately.
Okay, fair enough. Yeah, no, it's just everything seems to be a little bit more volatile than it was a week ago.
Yeah.
Even, currency pairs, gold, indices, take your pick. Everything is moving like crazy. Miko, if you want to share your screen, I'd be curious to see your thoughts on what's happening. I mean, again, we've had a lot of risk-off movement, meaning, gold is actually higher right now, but at the same time, you have stocks selling off hard. You have Bitcoin and crypto, generally speaking, just getting killed recently. What are your thoughts? What are you looking at most in the markets right now?
Well, I'm still pretty much on the JPY train. I'm still looking for pullbacks on some of those. Some I like better than others. I like dollar yen to the downside as well, but continuing what Marko said, we are quite corrective. So this to me is a good sign because it means that if we kind of continue in this, we're probably likely going to take a dive at some point. So I'm kind of waiting to try and catch that pullback. A few areas I'm looking at for dollar yen being this brief area of support, and if we go a little bit higher, that level up there as well. I also do like euro yen as well. There's a really nice level up here. I'm just not too sure if we will have enough energy to get there, but I don't know. We've had such a big drop. I feel like we might. And again, I'm looking for a big sell. Basically just looking for continuation of that bearishness from the previous weeks. In terms of dollar, I like euro USD to the upside. Seems to be selling off pretty hard right now, but if I quickly just expand to the daily chart, it does look like we're ever so slowly starting to form some higher highs and higher lows. So my thoughts are I'm looking for that to continue and push higher. Other dollar pairs I'm not really such a big fan on. I feel like a lot of dollar pairs are still quite choppy, although I do like DXY to the downside as well. So I kind of like that synchronicity between euro USD upside and dollar downside because I'm looking at this for dollar as well. So in terms of dollar, only euro USD kind of makes sense to me, but I really like yen to the downside as well.
Yeah, I like that euro dollar chart. I know this is not part of you guys' system, but on the Edge Finder, I'm getting a euro dollar +8, which is, kind of a pretty bullish signal in terms of when we look at the economic data. A lot of stuff has been a little bit weak out of the US. That's been why the dollar index itself has been pretty weak. That was what got everything going in terms of volatility last week was the jobs data coming in very light. And then we proceeded to watch the yen get crazy strong. And, what's interesting about the Japanese yen right now is it's always an interesting chart. But right now, more so than ever, because every market is looking at the dollar yen right now. Usually it's like, oh, currency guys, we love the yen, or indices, we watch the NASDAQ, we watch the Dow. But right now, everybody is watching the Japanese yen because there's concerns about the global economy, and the yen is a big bank in the world. And so if there's sudden surge in the value of the yen, it is really dragging everything else down. So we'll have to see. But stocks are bouncing back a little bit today. We had some better than expected numbers. I'd be curious to hear you guys' thoughts on the dollar index first. Did we find a bottom on this one? And I guess, Marco, you first. Are we bottoming out on the dollar, or is this just a pullback before a bigger move lower? What do you think?
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
Well, for the DXY, because I'm a momentum trader, for me, the momentum on the daily chart is still going to be in the seller's favor. So we have some major bearish legs right here. Sure, the bulls are getting a bit of a control back, but it's nothing compared to the size of these big red candles. As far as support and resistance goes, yes, this is a major level, so a bounce is happening as expected. But then again, you have these levels that are even lower. So I tend to rely on only momentum analysis for my conclusions. And I would say for now, the sellers are still in control on this chart. On the 4-hour, kind of range bound right here, and the 1 hour is probably going to look pretty flat. So yeah, I would focus on the daily chart, and I would say this has a bit more downside in my personal opinion. Again, it all depends on if we get a big blue candle, well then the bulls are going to be back in control for sure.
Okay. Yeah, no, it's I think that it's clear that the dollar may have, at least for now, found a short-term bottom. I guess the bigger debate for everyone now is this kind of a bounce that sellers are going to rip into, or is this something is this a year-long range that we're just going to fall back and forth into? So we'll see. Again, dollar weakness has been very, very strong the last few weeks. Maybe we found a short-term bottom. I guess, Miko, what do you think? Are you more looking for the rebound play? Are you looking to trade this thing back up? Obviously, with you being potentially long biased on the euro, sounds like you're a little bit more on the bearish side of the dollar.
Yeah, definitely. I do think DXY has still more room to the downside. We've spilled over since NFP and we've seen some really nice momentum, and I'm just looking for this price action here to continue. So as we push up, I'm just looking for opportunities to well, not sell DXY but buy euro. But I'm anticipating this to be just another lower high, because you can see that the way the market's moving, it's taking its time as well. It's not like we shot up straight away, although maybe that could happen. But we are still quite choppy, which tells me that this most likely is just a pullback of this move, and the market is likely to continue further. There's a nice low here, which actually, if we go back to the daily chart, was a really nice, actually a little bit higher up, really nice level of support, which the market kept bouncing on for a while before it broke after NFP. That could be a really nice place to anticipate more downside for the dollar. So yeah, my bias is very, very bearish. I'm expecting us to come right back to this low. Unless things change drastically, I'm anticipating more weakness in the dollar.
Sure. Yeah, and I think that level you've got drawn on the DXY daily chart, that big level of resistance around 104, that was a huge level for the bulls on the on the way up, and in the last few months. Once it's now broken, it would make sense that on a price action perspective, that would be a big seller's kind of haven, right? So if you do see a continued push higher in the dollar index, that would be a little bit of a concerning level, I think, for bulls, because again, look at this 1, 2, 3, 4, 5, 6, 7, 8 different times where dollar index held for the bulls. And then once it broke, it really flushed to the downside. So if we get any sort of a similar reaction on a retest of that area, it could be very interesting for some individual currency pairs. Next up is talking about gold, everybody's favorite in the audience. Gold has confused a lot of traders. I've gone on this breakdown many times, so I won't do it long, but here's a quick breakdown. A lot of people get very confused on big fears about a black swan or recession. Why the heck did gold go down? And the actual historical playbook of a recession for gold is very tried and true. We've seen it over and over, 1930s, 2020, 2008. What usually happens with gold is in a global margin call situation, everybody needs to get into cash at the hedge fund level. Where do they get cash? Stocks, crypto, and gold, real estate. They sell everything, right? So in a real sell-off, they sell everything. So the bears could point to, look, even gold was dropping. That's super bearish. But the playbook also usually entails selling initially, and then we see strong buying. And that could go for a while, or it could go very quickly. But the point is usually in a recession fear, if there is a real concern about a recession like in 2020, the playbook is usually people sell things to deleverage and get into cash, and then people buy the dip heavily on gold as a safe haven. Right now, chart is looking a little bit choppy to me, but I'm curious, Marko, what are your thoughts on gold? Any time frame, anything you'd like to go through?
Yeah, so it's best to do the daily chart. The lower ones are not telling me much. And the daily chart is, as you said, pretty choppy. So still stuck in this overall range. I have some key levels I want to see the price break. It is, of course, this high, and it's going to be this low as well. So it looks pretty flat, corrective, and range bound in this area. What I'm waiting for is just some large legs, such as these ones, very clean price action. Until I get that, I think we're just going to continue doing this. And yes, the drop did happen, as you said, but it was pretty small. I mean, when you compare it to the size of the overall candles in the whole daily chart. So I think the bulls and the bears have still not reached a decision if they want to go up or down until we break these key levels. So that is what I'm waiting for. Same as Bitcoin, basically.
Sure. Yeah, no, and that will be very, very, very interesting to see, because I kind of agree. Gold has slowed down in terms of picking a direction. It's been a market where if you've been buying low, selling high, you've been making a lot of money in the gold world. But over the longer term, what tends to happen, I've seen this happen so many times in my channel's career, is people get used to the environment that they're in. So people will say, oh, I'm going to sell gold up here, I'll buy it down here, and then I'll just play this range. But then when something really truly changes, let's say, for example, that gold breaks to the downside and drastically starts trending lower, people get blindsided by that. And long story short, markets are very hard to predict. And if you're dead wrong about something, you can always be dead wrong at any point. You have to ask yourselves, what am I going to do about it when I'm dead wrong, not if, because sometimes it's going to happen. Anyways, we'll see what happens with gold. It's been very choppy, similar to Bitcoin. I know we've had that conversation several times, but Miko, what are your thoughts? Gold or silver, metals market right now? Anything interesting to you there?
So yeah, I'm not a big fan of the price action, I must admit. I mean, I'm still very bullish because, again, where I derive my bias from is the daily, weekly, monthly charts, which for gold hasn't really changed much. It's just been the massive breakout we had earlier this year, and that momentum is still kind of at play. But I can see that from a daily perspective, we are starting to tire. And it's almost like the market's kind of in this kind of ascending channel, if you will, which is, again, not a sign of a lot of strength and kind of a sign that we're tiring. But fundamentally, maybe something happens and maybe we break a low, maybe we break high of great momentum as well, and things look good again. But I think for the time being, like you said, buying low, selling high, at least if you're like a technical trader and you're just looking for trading opportunities, that's probably the best bet. So, as we come back to support around here, I would expect the market to react from that and see a bounce higher. Not too sure about the selling side of things. I can see prices fading at the highs, but I think logically just looking to buy a low is the best bet and see how gold develops. But I'm kind of waiting for momentum to come back. Yeah.
Fair enough. I'll give my take on it too, just in case people didn't hear it when I talked about it earlier. Gold for me, I do like it on the fundamental side. On the long side, I've been very clear about that for, the whole year pretty much. Took some losses during this time, made some money here, gave back a little bit in this chop recently. I haven't really been trading it so much personally that much the last, few weeks. today, where I'm at with it, well, I like the idea of buying it similar to you, Miko. I do like that level if I'm watching for anything, which would probably be the 2360 level, let's call it. And I'm also potentially interested around the 2300 level if we do see a little bit more downside. But if it breaks that level, then to me that would be kind of a price action bearish signal. And I'm not necessarily saying I would go short at that time because it would depend on the fundamentals, but from a price action standpoint, that would be my, okay, this didn't work out idea. I'm going to get out of there. So I think gold could see higher prices. I wouldn't be surprised if we see 2,500 this year. But, kind of have to just see what price action does. 2,500, by the way, is just a fresh high through the highs. I don't think it's out of the question that if you see the trend of this first half of the year sort of continue, we could very well see gold make higher prices. But in the meantime, maybe it's due to retest some levels of support first. We'll see. Are we going to see another reversal midday, Frank? That's the question.
That is tricky. It seems like this reaction was just off unemployment claims.
Mm-hmm.
I think the NASDAQ rose like 200 points just off a lower claims number. So I think they're looking for any excuse to rebound, because it usually doesn't react like this.
Mm-hmm.
But I guess we still have to keep in mind that unemployment rate is still at 4.3% and is 10,000 less unemployment claims than expected going to fix that issue? Or are we going to still be at the same or similar levels that we see now for unemployment rate? I'm not really sure. Unless there's some really good earnings I missed, because I wasn't really.
I don't think we've had any big ones in the last few days. Most of it was, I think, last week. But yeah, don't think it was a big earnings save. I think I was saying this earlier, Frank. Right now, I did a study on this. Actually, I'll repeat it for anybody who missed this and for you to see this. So I did an average true range study on the NASDAQ. And with the VIX being elevated like this, the average true range of the NASDAQ, which was moving about 250 points a day, so let's call it 250 before all this craziness, is now moving 500 points per day on average. So I did the math on this, and I didn't actually do the math, but rough guesstimate math would say that what was a 1% move over here is now doubled. So the average move, so if you had a 1% up or down day a month ago, it's like the same as saying a 2% up or down move right now. That's how violent the market is, which could at any moment lead to more of what we saw the other day. Maybe we're just going to flip and intraday and take out the lows. Yesterday, what happened, Frank, which I thought was really interesting, was the Bank of Japan governor said, we won't hike rates if volatility in the world is high. Like, we're going to, because we don't want the global situation to worsen, we're on the same team, we won't hike rates unless volatility subsides, which the market took as good news. But then it didn't even matter in the second half of the day where people got scared again, and they said, well, it still could lead to margin calls, unwind, recession. That is still threatening. So today's good news it makes me a little bit nervous, because I feel like yesterday, where there was great news in the morning that saved the day, but then the market still just said, not enough, and sold off in the second half.
Yeah, I think that. So yesterday we closed below our 200-day on the NAS. I've had this drawn up, a big resistance zone starting at like 18,600s, going all the way up to the 19,000s range. But I think we could come up to test that if we see some sort of recovery here. But I don't know if I trust a bullish rally yet. So I'm more so on the side of trading both sides until we see a longer term direction picked. But honestly, I'm not too sure about this move. I think we're just going to see these large intraday swings, and I'm kind of I think I still remain on the bearish side. I think we we do test lower. But that will depend. So if the week ends and we see this kind of candle or somewhere in the green, I would be less worried about a drop lower.
So you're watching
But-
the weekly chart for this one too?
But still, it's just kind of, it's tricky because you don't know if it's going to reverse in the middle of the day. And,
Yeah.
And we saw that yesterday. We saw what looked like some really good bullishness and then drop lower.
Yeah.
So,
I'll show you one thing on my chart too, Frank, that I was looking at. So I've got these two levels look really interesting to me. So you had yesterday's attempt, and also let's just call it the middle of the last 2 days, this spike up into this region, which got sold heavily, and then obviously the spike down to this region where people said, oh, that's a little bit oversold. So I almost feel like the best thing I could do from just a managing situation perspective, kind of like you, I am not fully convinced that this bounce is going to just rip back to the highs, but I'm also not sure. We might have put in a low. So I'm kind of taking it as I'm going to wait for a strong candle closure outside of one of those two regions. If it's lower, buckle up. We might be seeing the 16,000s. And if it's higher, maybe we start to trend back up into that range that you talked about, that 18,600 to 19,500, let's call it, or 19,000, just this region here. It's kind of tough to say. And with volatility being so high, I think these moves can be very, very deceiving. Like the VIX being so high, you're like, oh my gosh, 1.5% up, 2% up. But that's just the new norm. So it's not like a breaking the norm move right now. It's just so volatile.
yeah. And what we've seen the past 3 days are what look like big recoveries, then turn back to the downside.
Yes.
And what we've seen before in late July was this sort of consolidation zone, and then it looked like it broke out only to test lower levels. So that is the key issue here, is that we are in a downtrend right now, and the question is, are we going to break above? So these lines are drawn out. It looks like a wedge almost.
Yeah.
I'm still not confident, and I've been saying that, like, I guess the past week or so, but
well, I think you've been early to the bearish side, which was the right thing to do, and I think it's fine to be cautious to one side or the other right now in this market because it is so clearly uncertain. I mean, we're seeing these big moves lower that can't follow through and these big moves higher that can't follow through. It seems like the market itself doesn't know what it wants to do. It's still trying out these different levels, and we very well may go retest these lows and maybe we bounce off that. But again, for me, the big levels are watching this, and let's see if we can get a candle closure outside one way or the other, and maybe from there we get a little bit more short-term, directional bias. But we will see. It is just a crazy market out there.
So what I'm doing now is I'm doing these bullish call spreads. So I'm buying a put or buying a call at the money and then selling one out. So if price rips higher or drifts up, then it will be a profitable trade. And at the same time, I'm having these out of the money puts in play, because if we see, these continued steep drops, those plays that are like 1 day out or 0 DTE they'll cost like 20, 30 cents. They could be worth 90 cents or a couple dollars by the end of the day.
Yep.
So that's kind of a hedge there. And then if they expire worthless, the call vertical will make some money. So it will hopefully keep me in profit. But that's just kind of the play right now, is cautiously bullish to the upside, but I still remain bearish.
Upside for the purpose of like collecting some premium kind of. I kind of like that idea.
It just, I don't think the market's going to go much higher. And I mean, it's proven me wrong so many times. And unemployment claims could be like the only thing we need to see for the rest of the week. Because there's no other news for the USD, I don't think.
I don't think so either. I think that might have been why the movement was so violent this morning, Frank, is because there was nothing else for the market to sink its teeth in. And it's just kind of saying, I think what saved the day on Monday was, and it didn't save it for me because unfortunately I got stopped out a lot of stuff on the way down and then it ripped back. But what saved the day for the market on Monday was services PMI came in slightly better than expected. And today might be saving the day unemployment claims. But the issue is that these save the day events have not been following through. So it's like these save the day events are just stopping the bleeding. And maybe that just means we chop sideways for a little bit before picking a direction one way or the other. But it's a tricky market, that's for sure. And a lot of people are I've gotten so many questions on the YouTube comments just from people who are saying, I don't know how to trade this level of volatility because it is so different than the kinds of moves that people are used to.
Yeah. If we want to break it down to lower time frames, though, I've noticed a pattern that it does is that it makes these higher highs during the day and then pulls back again.
Yes.
Forming these lower levels too. So we have this sort of trend going on where it even happened yesterday where, we break higher only to test lower. I think that's just the kind of market we're in. And the question is, so if it breaks one way, is it going to be to the upside or the downside? And, I still think downside. I think because you point to geopolitical tensions, they're getting worse and worse in the Middle East. There's uncertainty about the presidency and, the Fed, even if they cut by 50, it's not a great sign. It'll
arguably one of the biggest concerns with the Fed cutting would be if they cut rates and it triggers more buying of the yen, that could lead to more margin call stuff. That's the biggest bear case that I personally see is if the yen, if you look no further than the Japanese yen right now, because if the Japanese yen gets strong, it triggers stop hunting, which we've seen in the commitment of traders report. I thought this was interesting. I don't know if I talked to you about this, Frank, but this was the interesting thing in the COT report. Last filing, we saw not necessarily a lot of buying of the Japanese yen, but a massive amount of short covering of the Japanese yen, which is what led to Monday's big sell-off. Was a huge, tons of people needing to short dollar or not short, but sell back, dollars to buy yen, sell stocks to buy yen, sell gold to buy yen. The bears would say that has the potential to become a bigger short squeeze. The bulls would say it's behind us now. We will see who's right. And I think that that's why the market is so uncertain. And it's also uncertain, like you pointed out, about the presidential elections, about what's going on in the Middle East. It's just a lot of question marks that have risen in the last few months. And again, we'll kind of have to wait to see what the big trigger one way or the other becomes.
Yeah. And I think if we do test that trend line that I just drew or the longer term one, I may just, look for a 0 DTE put. And I'm expecting some wild swings. So if it tests a level that I think it's been respecting, it's probably going to keep doing the same. So that's just my theory, because when we sell off, we sell off much harder. So the puts are more valuable in a shorter amount of time.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.